Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what happened today and what we can expect, well, moving forward into a potentially a pretty important week. Once again, we have FOMC on Wednesday. And after getting two inflation data being CPI and PPI, both of which came hotter than expected, especially PPI, which apparently the Fed cares more about. Yeah, I'm not going to lie, it's looking a little bit questionable coming into Wednesday. I have a few swings on the table, but I am, like 80% cash right now. Just I'm gonna, patiently waiting to see what happens on that on Wednesday, because, I can't imagine they're going to be too dovish. Let's just say that after, the inflation readings we got this week. Anyway, let's just jump right into it though. If you enjoyed the video, don't forget to hit that like button. Of course, if you enjoyed it, and this is not financial advice, I'm not a financial advisor. And of course, my membership section is live on YouTube. The link is down below for just $3.99 a month. You get access to my intraday thoughts, posts, updates, options flow on Tesla throughout the day, every day as it's trading. But jumping right into it, Tesla closing the day actually into green. Definitely a welcome sight for bulls at least. So, at least that's something. 0.65% in the green, 163.56 per share, which compared to the market, yeah, pretty respectable outperformance, right? Market down about 1.2% of QQQ, right? So yeah, not bad. Honestly, it's, pretty decent. And the more important thing is the fact that Tesla didn't even break yesterday's low. So that's not too bad. A bit of an inside day signaling at a potential reversal, but it's not one I am personally very confident in, not one I'm definitely playing. Right now I'm kind of on the sidelines with Tesla, right? I have a small account that's just holding shares, this kind of long-term shares. But on my main account, I'm not playing Tesla at all right now. I'm just kind of waiting. I'll just, see what happens, right? I'm not interested in playing this right now. And the main reason for that is because, well, we closed below some pretty key levels that are not great, including on, especially the weekly, where, it's just levels that we wouldn't want to be closing below. For instance, on the weekly, you can kind of see it as a, bit of a, I guess, better picture. We were inside this channel, right? This massive channel that we were in, right? Many times, right? Like this right here, just constantly zigzagging in the channel. And we bounced off of the bottom of the channel many times, right? We got rejected by the top of the channel many times. And, and it's been respecting the channel. Usually these channels do play out to the upside, right? Like, one thing that could have happened, for instance, or at least maybe, in theory should have happened, is the fact that, maybe a bit of bounce here, maybe a slight retrace, but then ultimately we go higher and at the very least retest that, right? That was the ideal scenario that, for the bulls, but we didn't get that, right? And instead we came back down to retest the channel once again. And the thing that's scary here, that's not really ideal, is the fact that we closed the weekly candle below 165, below the channel. Not good. Like that's not good right now. Obviously that doesn't mean we have to just completely continue crashing straight up, with no bounce in between. No, not necessarily. We can get bounces in between, which we'll talk about on the daily soon. And there might be one around the corner potentially, but again, I wouldn't hold my breath for it. And I'll tell you kind of what level I'm personally waiting on before, considering a long position for at least a short-term bounce, right? I'll talk about that as well as we, kind of, move into it and transition into that topic. But nonetheless, the point I'm trying to make here is the fact that, pretty bearish close, right? Remember I talked about this channel, the double red one right here, where, we were kind of moving up and respecting it many times right here, right? This situation right here, this double red channel, double line over here, right? We respected it many times over here, which kind of combined with this descending channel over here as well. And, we held it, right? We held it. And remember how we broke below on this week I told you guys about, and then how we came up to retest this channel at 182. And we also discussed that and we got rejected. And so far it was like a perfect rejection, retest and rejection of the channel. We talked about this on like, what was this, Monday, I think even, right? Check the videos, it was there, right? So far, and the follow through is there. Like we got with that perfect rejection and we continue following through. We broke down below this descending channel. So what happens next for Tesla, right? What happens next? That's the main question. Like, okay, fine, cool. It's bearish, right? We closed below 165, bearish. Below the channel, bearish, right? Not ideal. What is next? Well, the options flow, first of all, was interesting. So we had a 4.2 million put for Tesla that came above the ask at pretty much noon. 175 put for next week above the ask. Also a 1.3 million, 160 put for a couple of months out. Cool. Pretty bearish, obviously, especially above the ask, right? For next week. Okay, that's pretty bearish. It is in the money, of course, but still pretty darn bearish. Cool. Not too long after that, we had a flood of calls came in, right, on Tesla, including a 3 million call also for next week, 162.5 call, which is pretty much at the money. We'll just say like almost at the money, right? So there's like a battle between whales here, 4.2 million whale and a 3 million whale betting on next week. One's betting on downside, one's betting on upside. Even the whales are like, don't even know where the thing is going. But, that's important to know. But the way I look at it is this, right? So going to the 1 hour chart very quickly here. we're pretty much dancing in this little congestion period. Like, once again, like, congestion like we had up here, the same congestion that we had all the way back up. Actually, no, this was the main one, right? This was the main one. Oh, no, the one up here. Yeah, remember when we were congesting all the way up here between 198, or no, up here. 198 and then the 205, remember this area, right? We're just essentially doing that again. We're just congesting in this area once again, the bottom being pretty much 160, the top being pretty much 164 to 5, right? You buy 160, you sell 164, let's just say, right? That's kind of the situation we find ourselves in. The crossover on the MACD and the RSI are looking pretty good on the 1 hour, actually. So there is a potential to, break up, right? And if we break above this kind of 164, 165 level, I do think that, it's not impossible to come up to about 167. Like, that really wouldn't shock me if we come up to about 167 to fill this fair value gap that we left above us, right? And what would that look like on the daily? Well, that would pretty much bring us right into this channel. But keep in mind, the difference here is the fact that when we were above this bottom channel and we kept coming into it, right? When you're coming down into this bottom of this descending channel, like this, kind of line, like blinking on the word transparent channel down here, you can see, right? When we're coming down into it, well, naturally, it's supposed to act as a support, right? So, whether we bounce off the top of the channel or the bottom of the channel, for instance, here we bounce off the top of the channel, here we bounce off the bottom of the channel, top of the channel, bottom of the channel, right? The point is the range, right? It's the range. But now that we're coming back into it from below, in theory, this should now act as a resistance. So if we do get a bit of a bounce, if we do break above 164/5, and if we do come up to fill the fair value gap somewhere around 167 to 8 roughly, all that's going to do is bring us right back into the channel. The channel should in theory now turn into resistance and most likely reject us back down. So I think the best case scenario for bulls right now, that's a realistic one, is we do get a small bounce and then we ultimately reject and make our way back down into the 150s. Something like this is what I can see happening next for the bulls, right? That's option one, but that's assuming we break above 164/5 on the 1 hour chart. If we don't, and let's say we do the opposite, we break below 160, well, in my opinion, we're seeing the mid 150s, if not potentially even the low 150s next, which is a crucial area. That is the area I am personally interested in starting to, go long once again. And that will be the area I'll be eyeballing, like pretty heavily, actually. This was essentially a fair value gap right here. If I turn on this thing, you can see, right? Nice green, rectangle, if you will. Beautiful, not fair value gap, sorry, order block, right? Nice, beautiful order block. Pretty much perfect, almost at 152. So this 152 area to, 160, you can even say, but like I would say around the mid 150s, seems to be a pretty damn good risk reward type area to buy at. And I do think Tesla should, at the very least, assuming we go straight down into there, stop the bleeding and potentially actually look for a bounce, which if we don't get the bounce like I talked about, at the beginning of next week, pretty much straight away, and we do bleed into the 150s first, that's where I expect us to essentially stop bleeding and essentially start looking for a bounce, which then I think will take us into this channel, which can look something like this, right? So for instance, we come down like this, right? Somewhere around this general area, right? Find some support, buyers step in, and then we do bounce from here. And then we come up to the channel once again, find the resistance. So pretty much you'll be trading from 155 to about 165 as an example, which will coincide perfectly with this resistance that we're so far having issues breaking back above. And that would pretty much be a double resistance with 165 and also the channel now acting as a resistance, which then I think will break and then ultimately make us go down even lower to about the 140s, which I think has a very real chance of being the bottom. Now, will it actually be the bottom? Nobody knows. That is a candidate though. It is an absolute candidate for being the bottom. Now, if this like area right here, which is the trend line from all the way back here, if that decides to break and we do come all the way down to this level and we do break below it, that's when I think at the very least we will most likely retest the lows from a couple of years ago at pretty much $100 per share, which of course, if that is broken and if we go even below that, unironically, there's a decent chance at the very least we come down to 90s, if not all the way down to the almost $70 per share. That's kind of the overall picture I'm seeing right now on Tesla. But for the very, very short term, I'm sure you have a decent idea as to what I'm personally expecting, what I'm personally seeing, right? Again, we're definitely not out of the woodworks just yet. We're definitely closing below some pretty crucial levels. We're definitely losing some pretty crucial areas right now as well. Like, pretty much this channel, which is pretty bearish. Like these channels should not be breaking to the downside. These channels exist to pretty much create a downtrend that ultimately breaks to the upside more often than not. That is what should happen. That should be like the normal pathway. So breaking below this kind of channel like this and showing this sort of weakness is not good. I'm not gonna lie, it's not bullish. Obviously this can still be a false breakout or breakdown, I guess. I personally wouldn't hold my breath for it. It's not impossible though. But that's kind of the main way I'm looking at it, or the main things, if you will, that I'm eyeballing for Tesla right now. It's still definitely looking bearish, right? It might get a short-term bounce here, or we bleed to 150s first before a short-ish term bounce from there. But ultimately, I wouldn't be surprised if we do come down to about the 140s, like mid to low 140s. Tesla's trend line way back from here, right? Give or take, of course. And the bull's better. Damn, hope that holds. That's all I'm gonna say. If that doesn't hold, we're in for the rest of the year is going to be painful, very painful, actually, like extremely painful, a lot more painful than it has been so far, because the pain will just simply continue. Now, the one thing that's interesting is, let's say you do measure this pull, right? So obviously when you have a bear flag like this, right, in theory, what you do is you take the pull, so you go from here all the way down to where the bear flag essentially started, and then we went up, and then we broke down below the bear flag. So in theory, what you could do to kind of determine maybe how low do we actually go is the pull, right? The breakdown of the pull is from here, right? That's roughly what we broke down, which then, so you can see, actually, assuming we play out, right? This is how you kind of measure the breakdown movement, right? You have the pull of the flag, bull flag or bear flag, doesn't matter. You have the actual flag itself forming, and then you pretty much measure the pull from the previous distance that initially created the initial bear flag, or in this case, bear flag, to where the breakdown from the literal flag was, and that right there is where it may take us, which at the moment is suggesting that it's a very real possibility we double bottom at pretty much $100 per share. Will that actually happen? Who knows? We'll take it level by level, but I definitely would not discount this possibility. It's definitely not an impossible possibility, especially if the market starts to correct, because Tesla has not really been following the market. Like, yes, it was green today on a decently red market day, but not too green, right? Only a little bit. And if the market actually decides to correct, if the market actually pukes, which so far, especially with FOMC next week after such a hot CPI prints, and so far the market kind of turning over a little bit over here, right? Not really the best look here for like QQQ SPY. It's kind of the same idea roughly. Not the best look in the entire world here, especially for tech. That could affect Tesla pretty negatively. So we'll see how that plays out, right? But just, food for thought, I guess, if that makes sense, right? If the market decides to puke itself down and ultimately have a decent correction, that will bring Tesla down a lot more, most likely. At least in theory, it should. So again, we'll take it level by level. No reason to predict way out in the future, but I just want to make sure you understand that those levels that I talked about, 140 and potentially 100, and even absolute worst case scenario, which I don't think it will happen, but worst case scenario, like $70 per share, are not out of the question. That it is what it is. Just it is what it is, right? But yeah, thanks for watching. If you enjoyed the video, as usual, don't forget to hit that like button. Definitely check out the membership section down below if you're interested. Love to have you there. But with all that being said, I'll see you on Monday. Peace.